just sold 3 shares. Surprise bar down, and we closed below the low of day. So it is selling low in a trading range. I sold at 331.15. I'm gonna sell more at 331.25. Just looking for a test of yesterday's close. If this current bar is another big bear bar, I might stay in. I'm not sure. I didn't get filled on my second entry on this bar. I'll still leave the order if this closes as a bull signal bar, then I'll exit above it. So from what I've seen in these kinds of scenarios, it's common to get a pause bar on the bar right after the surprise. So you get a surprise breakout closing below the low. The next bar is often a pause bar or a small bear bar, small bull bar. And then we get one more spike down. So that might be what we're doing here. So if it's a big bull bar or any bull bar closing on its high, I'll exit above. If it's anything else, I'll stay in and look for one more flush down to yesterday's close. That's a tough one. I think I should exit above it. So it was a bull bar, but a tail on top, and not particularly big, so tough call, but I think I will exit if it gets a couple cents above the signal bar. If it doesn't trigger, then I'll stay in. It's been a really long time since I've taken a trade, so really nervous for this one. This is a setup that I feel like I'm comfortable with, so that's making it a little bit easier, but it also feels really good to be back trading again. So trying to balance the nerves and the excitement at the same time. And once the trade is done, I'll show a couple examples of what I was looking for. And the opening couple hours is very similar to yesterday's first couple hours. We're pretty much exactly where we were yesterday. Spike down, and then a couple legs up to a new high, failed breakout. Spike down, couple legs up to a new high, failed breakout, and then 2 legs down to a new low, 2 legs down to a new low. So we're pretty much doing the exact same thing we did yesterday, but today we have the surprise bar. Yesterday we went down with weaker bear bars. So it could lead to a different outcome today because of that surprise. But that's why I wanted to get out above the bull bar, because it's still a second entry after 2 legs down, so it's still a bull flag. Same with this, still 2 legs down. So once you start to get 3 or 4 or 5 bars, a 5-bar micro channel, chances are we're going at least to test this high. So if we start to get a couple bull bars in a row, or a few bull bars in a row, chances increase that we go to test this high up here. So if we don't get to my target on this bar, on the current bar, I'll exit at the close of the bar, because we broke below the low. So we technically got the small second leg down from the surprise. So now that we've had that extra leg down, as soon as this bar closes, I'll exit. But we often do get a spike down on that next bar. Okay, exited there at 331.12, so 3 cents on 3 shares, 9-cent profit, break-even trade. I'll show what I was looking for here. So it's similar to this. We're in a trading range, failed breakout to a new high, and we get a move down, a pause, and then a surprise bar that breaks below the low of the day. And so that surprise often has its own second leg. And so I sold the close of the surprise, and then also wanted to sell 1 point higher or 10 or 20 cents higher, looking for that third leg. And so often that pause bar after the surprise, as long as it's not closing on its high, it's worth it to stay in. Try to find another example like that. So here's another example. It's not exactly the same. Actually, I just want to mention I have GIFT here because that third impulse down, so first leg, pause, and this surprise, smaller pause, and this impulse bar is the follow through from this bar. So that usually ends the move. So as soon as you get that kind of bar, that's what I was looking for today. It's worth just exiting at the close of this bar. And here it's not exactly the same as today, but you get a surprise bar to a new low, and then we get that pause bar, and then we get the third impulse down. That's usually the gift. If you get a pretty big size bar like this, just exit on the close. That's usually what I do. Exit on the close because that could signal the end of that move down. So that's how it looks when it works out properly. You sell the close of that surprise, sell one scalp unit higher, either 10 cents or 20 cents, and look for that third leg down or that follow through impulse. So that's if it works out correctly. And then we have these scenarios like this. So here's a similar situation. Breakout to a minor breakout to a new high, and then impulse down, pause, then surprise bar to a new low, breaks below the low of the day. You can sell that close and 10 cents higher or 20 cents higher. But then here we get a strong bull bar closing on its high. So that's a valid exit, I think, because once we start to get 3 or 4 consecutive bull bars, it could lead to a test of the high up here, or test of the high of the sell climax. And then, so better to exit above the bull bar and then look to exit below selling pressure. So maybe below this bear bar. So I think it's better to exit above a bull bar, but even in this case, after the bull bar, we still went sideways and then got that third impulse down. So the follow through impulse, and then exiting, this is still considered a gift. So it's worth it to exit on the close of this. Obviously, this is more of a new setup for me because here I actually sold here, which is clearly the wrong thing to do based on my current analysis. So I think the sell was okay here. I don't know when this trade was, December 13th last year of 2017, I think. So that was okay to sell here, scalp out. But here, this should have been a buy or an exit and not a sell. So I think even if there's a bull bar, there's still a good chance of sideways and down for that third impulse, the follow through impulse. But I like to exit above a bull bar here and then look to re-enter. At least that's how I'm going to do it for now. And once I get more data on it, I can change my approach to it. And so here today, very similar situation. Surprise bar, not as big as it could have been actually. Looking back, it's not the biggest bar on the chart. In those other examples, it was the biggest bar on the chart. So it's very similar in size, probably even smaller than the first bar of the day. So not a great surprise, but still closed below the low. So you sell that close, sell 10 cents higher, didn't get filled, and then get a pause bar and look for a third impulse. But here we didn't get a third impulse, the follow through impulse. Instead, we just broke below the low and then closed around the middle. So because we didn't get the follow through impulse right away, I decided to exit, and that ended up being the bottom of the move so far. So looks like management was pretty good for this. And now if we continue with strength here, increases the chances that we test up here.